Thank you.
Hi, good afternoon, everybody. We're just going to give a couple minutes for everyone to trickle in and join, and we will be started in 3 minutes.
If you're just joining us now, we'll be starting in just a couple minutes. We're going to give everyone a minute or so to get into the webinar.
Good afternoon, ladies and gentlemen, and welcome to Pineapple's Realtor webinar series. My name is Shubhadas Gupta, and I'm the CEO here at Pineapple, and I'd love to welcome and thank all of you in joining us for this incredible event. What you can expect is that each month here at Pineapple, we're going to be inviting out our incredible realtor partners to learn from some of the top executives in the Canadian finance and real estate landscape and have them share their insights on what best things we can do to navigate the current year and the current real estate market ahead. As we begin, I'd like to just cover some housekeeping. If anybody has any questions that they would like to ask, please feel free to go ahead and do so by entering your question into the chat function below. Our moderators and hosts will definitely do their best to ensure that all of your questions get answered. Now, here at Pineapple, education lives at the forefront of a lot of the things that we do. And we believe very heavily in educating our mortgage agents to ensure that they're armed with the most up-to-date information to share with you, their valued partners, as well as their incredible clients. This Realtor webinar series is a way of us extending that education and that philosophy of knowledge to our incredible partners in the real estate community, because without all of you, then none of this community is really possible. Now, I want to just jump into one more housekeeping item, which is our belief in events. And I want to extend an invitation for all of you to join us at Pineapple Royale. This is also a philosophy that we have of giving back to the community that we serve. And this is our annual poker tournament designed to raise funds and awareness for the Canadian Cancer Society. Happening on February 26th at the beautiful Rebel nightclub overlooking the waterfront, you can join us for an incredible afternoon of cards, of networking and having some great time with your peers and colleagues while raising much needed funds and awareness for an incredible organization. I hope to see you there on February the 26th. And without any further ado, allow me to introduce all of you to our host for today's session, Pineapple's very own Senior Director of Marketing, Dennis Welsh.
Thanks, Shuba. One more housekeeping item here is actually just to ask everyone to follow us on social media. There'll be updates from today's webinar and then any kind of future updates for webinars in this series. It's my pleasure to welcome Eric Poblete from Equifax Canada. He's the Director of Mortgage and Housing at Equifax. He's been with them for about 12 years, I believe. And we're looking forward to him kicking off this series for us. Welcome, Eric.
Thank you, Dennis. Thank you, Shuba. Appreciate the opportunity in regards to presenting to many of your partners out there. And as Dennis mentioned, absolutely, education is a key component of Equifax as well. We have a lot of synergies in regards to what Pineapple does. And I do a lot of presentations for the mortgage industry. But today I've been asked to speak more so for their partners, the real estate agents, and provide a little bit of an overview. Now bear in mind, please, this is not going to be a how to read a credit file presentation. So I will be talking more at a 5,000 foot level. And what I'm going to do is really talk a little bit about, what is Equifax, just at a very high level. I'll talk a little bit about what trends are happening in the credit industry, what should be looking out for, things that are opportunities, and quite frankly, also concerns as well. But also, I thought when I was talking to Shuba and Dennis, one of the key areas I wanted to talk about was also credit education. You're finding more and more of your customers are asking you questions about credit because they're becoming aware of how important credit is in the whole transaction from start to finish. So I thought, not only talk about what's happening in the industry, but also talk about credit itself. And that component, I find that a lot of people get a lot of value from it, not just for their customers, but also for themselves. So I will be going through a presentation which should take us approximately 30 to 35 minutes. And I believe we have time for questions and answers later on in this presentation. But just a reminder as well, there is going to be a lot of information, but keep in mind that this information is available to you from Pineapple, and they'll be able to disseminate it accordingly. So, if you like to take a lot of notes, go ahead, but at the other end of the angle, just sit back and enjoy what's going on. No presentation would not be without our caveat of this is the views expressed by the speaker and not Equifax per se directly. So I do have to put that in there as always, a little bit of compliance from an Equifax perspective. Very quickly though, most people do know who Equifax is. I mean, we're a fairly ubiquitous name, but sometimes people aren't aware of just how large we are from the standpoint of a global perspective, not just Canada, but globally itself. I mean, at a very, very high level, Equifax, just so you know, is an old company. We've been around since 1899, and today we are actually in 24 countries around the world. We actually continue to grow because we are continuing to get bigger and bigger, but certainly it is a challenge as we go into all the different countries. But certainly Canada is one of the significant countries in the Equifax family itself. Our purpose, as I mentioned earlier, very similar to what Pineapple does as well. It's about education, and really our motto or our purpose is really helping people live their financial best. In some cases, and in most cases, part of that is education. It's helping people to understand how credit affects their lives, how it affects what they're doing, what they're buying, and to some degree also, how do you help them to understand what's the best way to manage their finance from a credit perspective. So certainly, helping people live their financial best is something that we live and breathe every day. Now, very, very high level from an Equifax perspective, many people just say, oh, it's a credit, it's a credit file and a credit score. But just so you're aware, there's much more to Equifax when we talk about all the financial corporations and what they do and how we support them. Obviously, credit risk is first and foremost for a lot of the people that work with Equifax. But secondly, we do a lot of also data-driven marketing. We support a lot of the financial institutions and credit cards and so forth, and even the mortgage space in regards to marketing and helping people to market their services. Identity and fraud, I'll talk a little bit about identity and fraud, but certainly because Equifax is the keeper of private information, we're also front and center in regards to protecting that information. And hence why we also provide identity and fraud services to protect that credit information in every process that we do, and especially in this case with the mortgage industry itself. Verification, this is where we actually authenticate people. When you're looking through different processes, and more of it, you're noticing online services like your bank, your credit card, or even when you're buying anything, you're finding that there's some verification going on because we want to make sure it's part and parcel to fraud that we have the right person who is buying that service or is accessing that data. And lastly, just to round off what Equifax has been doing, we also do workforce management. More and more, especially out of the US and coming into Canada, we actually are now the direct HR partner for many large companies in regards to when you're looking for pay stubs and payrolls and employment information, you actually come directly to Equifax in regards to some of that information. So as you can see, again, I just want to do a little bit of an overview of Equifax just to show you a little bit more of the size and scope of Equifax as a whole across, not just Canada, but around the world itself. But as we go through, and as I mentioned earlier, some of our data-driven analytics, some of the information we do provide to a lot of our partners, banks and so forth, and financial institutions is understanding what is out there, what are the risks when we talk about credit. And as such, I wanted to identify a few things, partly just because, I'm not sure what level people have from a financial background, but certainly it's good for you to have an understanding of exactly what Equifax is looking for or what Equifax is analyzing to be able to assist our customers overall. So one of the key things, this is top of mind, but, sometimes a lot of people have never had what is the true definition, or can you really explain to me what a mortgage trigger is? And why is that front and center? Well, we've all seen what's happened over the last 6 to 12 months. With the interest rates rising, some people have found themselves in a situation where they're actually not paying any more in regards to their principal, and basically their interest rates are not even covering the payments in regards to their loan that they have outstanding. So again, just wanted to have this definition out for you in regards to trigger rates, because you're finding that, again, it's not for new houses per se on this case, but certainly it's top of mind for a lot of customers in regards to, understanding where they are in their financial position in regards to what's happening in Canada overall. And I mentioned before, all these slides are available to you, so certainly take notes or at least have this as a reference sake. Now, why is that key from an Equifax perspective? Well, as I mentioned earlier, we do a lot of analyzing and we do look at a lot of the data that's out there. So from an Equifax perspective, very top of mind, these trigger rates and renewal rates, because if you remember 3 years ago, I'll be quite frank with you, March of 2020, guess what happened? COVID occurred. But at the same time, from an Equifax perspective, we also had a significant increase in regards to renewals. And those renewals, be it 3 and 5 year renewals, were significant because they were done at a very low interest rate. But if you fast forward, it's funny, but 3 years later, which is March of 2023, which is literally around the corner, a lot of those renewals are coming up. And so to that degree, we provide a lot of advice and direction to a lot of our brokers and lenders to say, hey, be prepared that there's actually going to be an influx of new activity coming in from a financial perspective. So again, we're even though people say, oh, it's going to be a quiet time, there's actually going to be a lot of activity happening from a financial perspective, especially with a lot of customers coming up. The other area that we also want to talk about, I was talking a little bit about COVID itself, but during that period, I think many of you were sort of familiar with, or at least heard the term payment deferral. And essentially a deferral was when an institution allowed a consumer to essentially not pay their payments for a certain period of time, maybe 3 months, maybe 6 months, or what be the case. So during that period, it was quite interesting. A lot of people did take a deferral, whether they needed it or not. And what did that play out, or how did that play out overall in the Canadian industry? Well, we're starting to see that. What ended up happening was a lot of Canadians actually maintained or kept a lot of that money that the government paid, and they didn't actually pay out a lot of their payments and so forth. So they actually accumulated wealth. It's quite interesting, actually, when we talk about it from a credit score perspective. During COVID, we actually saw a 6 to 10 point increase in national averages for credit scores because people were saving money and paying down debts. But again, from an analytical perspective, I want to provide you some information because there was a lot of deferrals out there. As I mentioned earlier, not everybody needed it, but certainly there was a lot out there. But I think as a heads up for many lenders and many of you as well, as you work with consumers, be conscientious that the people that did take deferrals, that prior to COVID were actually having some challenges already paying their bills, are actually going to find themselves in a very serious scenario as the interest rates rise and as they get to the point where they don't have as much disposable income. So as you can see, there's a lot of people that took it, but certainly we are now in a situation or timeline where this is going to, I hate to say the term, come to roost overall. The other area, though, as I mentioned earlier, that Equifax does look into, and this is probably more significant with regards to real estate agents as well as brokers and lenders. And I hate to say it, we're seeing a lot more of it in the news these days. We're seeing this scenario where there's fraud occurring in many different formats. From an Equifax perspective, I will concur, unfortunately, that fraud is increasing. Over the last 2 or 3 years during the COVID period, we've actually have tools at Equifax that can show exactly where there was fraudulent activity occurring. But I will say this is unfortunately, how can I say, a conservative number. Even though Equifax has seen 2.3 up to $3 billion in fraud loss avoidance, we basically anticipate that that's about half of the amount, because this is the fraud that we've avoided, but there is certainly fraud that did occur in Canada. And what does that mean for you? I mean, at the same time, we just want you to be aware that it's out there. It's still prevalent, and more so than not, just so you're aware of the differences, there is 2 types of frauds out there in Canada that we identify. One is what we call third-party fraud, and this is where you have fraud more for organized crime, or someone who, let's say, creates 100 different IDs to defraud the government from served payments. But I think the one that you have to be more conscientious of is what we call first-party fraud. Okay, now first-party fraud, some people call it fraud for housing. It's essentially when someone or a consumer maybe falsifies his information on their employment, on their income, on what wealth that they may have, in order for them to get a larger house or a better interest rate. That, from an Equifax perspective, or even from a financial perspective, is considered first-party fraud. And I want you to be aware of that. Why? Because as we move forward, unfortunately, with interest rates rising or have risen, with people who have less money available, you're going to find that more of that will occur. And the reason I'm identifying this as well, even for real estate agents, is be on the lookout, because you have to be conscious of what's going on. You have to be part of the whole solution for the industry to help prevent fraud in Canada, because it really will help everyone overall, will hurt everyone overall. Now, future trends to monitor. I know I probably have sounded a little bit doom and gloom for the first bit, but certainly there is some new things coming up that you should be aware of, and there are certainly some positives as well, especially in the real estate industry itself. So case, for example, new growth in Canada, new opportunities. We are anticipating, depending upon who you talk to, close to 500,000 new immigrants coming to Canada every year. And this is outstanding opportunity, because obviously they need to find a place to stay. So from that perspective, I personally, again, and this is one of those personal views, see that we are actually going to be seeing quite an uptick. I mean, I do know a lot of economists that are talking about Q4 or maybe next year in regards to an uptick or so forth, but I'm going to say I'm going to be a little bit more optimistic. And hear me out. The reason I see optimism is because 3 things. One is, as I mentioned, immigration is coming to Canada. There's more people still coming, and they have to have a place to live. Second of all, I'm going to say that essentially, the interest rates have leveled off. Many people are starting to understand, okay, this is the new norm. It's now time for me to go out and look for something out there, as far as something that's affordable in my world, but certainly something that's going to be, works well with the interest rates that's out there. But lastly, I'm going to talk about opportunity. Okay, beyond all that, I literally just this morning saw a ad for if you're in the Toronto area, in the Liberty Village area, for a condo, which was quoted at $750,000. Now that's a high price for people outside of Toronto, but it was a 600 square foot condo, and 3 years ago it was selling for $720,000. So as you can see, my thoughts around this is that there's a lot of opportunities. It's unfortunate, but there's a lot of opportunities for people to buy a lot more house, because unfortunately the prices have gone down. And I'm going to say very optimistically, if you wait too long, I anticipate that within 3 to 6 months, those prices will rise right back up very, very quickly. So I'm a little bit more bullish in regards to optimism, but certainly I think that some of the factors out there really point towards that. And I think a lot more optimism from everybody will actually help to improve the market, or at least juice the market up a little bit. Now, some people do ask me, though, questions in regards to new immigrants or new to Canada. How long does it take them in regards to getting credit and so forth? So I've provided a little bit of stats in regards to what the behaviors are for new people coming into Canada. But ultimately, I think one of the key factors I want to tell people is most people are focused on a score. So just so you know, when someone comes to Canada and they have a trade item that reports to Equifax, provided it reports for 3 months, we can actually generate a credit score. So it really does not take a long time, but certainly, again, there'll be thin files. So you have to accommodate the thin files in regards to the transactions that you're working with. But again, good information and stats in regards to how a new to Canada evolves and develops credit themselves. Now, one other aspect, though, I do want to, again, these are future trends that you have to see. One thing I want to make sure that you're aware of, there's also what we call buy now, pay later. Okay, Now, this is more for information's sake in its own regard, but I want you to be conscientious because this is kind of the hidden, I hate to say payments. These are when you, for example, buy $100 pair of shoes online and all of a sudden you see that pop up that says, would you like to pay over 4 months? That's a buy now, pay later scenario. So be careful because at this time in case, or at this point in time, a lot of that information is not reported to the credit bureau, and to some degree, it's a little bit blind to you as a real estate agent or a lender or a broker. So we always want to make sure that just be conscientious that the buy now, pay later, which is very popular in the UK and the US, is coming to Canada or is here. And you have to be careful. And when you work with consumers, make sure, hey, can you afford the house that we have? Now, over and above that, and as mentioned earlier again, please don't sit down and take a lot of notes, but I do want to just talk a little bit about open banking itself. And the reason I'm talking about all these different trends is about education. The well-educated financial provider, be it yourself as a real estate agent or a lender or a broker, is the one that the consumers are going to gravitate to because they're the ones that understand what's going on. And one of the things and concepts that's out there these days is what we call open banking. So I want you to be aware of that because open banking is really the essence of where a consumer actually provides access to their primary bank account so that when a lender makes an adjudication on that consumer for a house or a car, they actually are looking at their bank account and seeing how much money they have coming in, how much money they have going out, and they can actually do analytics as to what those payments are coming in and out. And the reason I put this out there is because it's becoming more and more popular. You're going to find that all the major financial institutions have already formed partnerships with open banking fintechs that are in Canada and around the world. And as such, there's going to be an evolution towards that. Because why? Because they look at more alternative data. You know, the traditional data for credit files, it's challenging because, you know, you have the new millennial people that are coming up. Some of them are only renting houses. Some are using the buy now, pay later. Some of them are not buying cars, like my nieces and nephews. They're not buying cars. They're just doing Uber everywhere. So all that traditional data may be lost in regards to how you adjudicate on somebody. So to that degree, I just want you to be aware that open banking is a concept that's becoming more and more popular, which allows people to see more of the financial transactions you're doing so that they can decide, is this person a good credit risk or is this person not a good credit risk? The other aspect, you know, and this is something that's good for both you as a real estate agent as well as regards to your consumers, is be aware of what's going on from a regulation perspective. So recently in Canada, originating out of Quebec, Bill 53 actually came up. And what Bill 53 does is actually give more control for consumers in regards to their credit information. What does that mean for you? What is the tactical endpoint of this? Well, essentially what it means is anyone in Canada now, because of Bill 53, can actually pull their credit information and score online for free from Equifax. So just go to equifax.ca and just go to the personal tab and you can get started and you yourself can get your free credit file and score from Equifax. Good education, good information, a value add that you can provide to your consumers itself. I do want to throw in one other component though, and this is certainly an interesting part. For those of you that work in the Quebec area, the second part of Bill 53 is also what we call a credit freeze. And this is interesting because this allows consumers to actually freeze their credit files so that no one can have access to it. Now, that can be challenging because you're trying to make a deal or you're trying to negotiate a deal with a consumer. And if you don't have their credit information, basically everything's a stop. But I want you to be aware that because of legislation in Quebec, that is now available to consumers. But keep in mind the rest of Canada, that does not occur. So it's really business as usual, except for the fact that you get a free credit file or you're able to get a free credit file from Equifax and the score when you go to the Equifax website itself. So as mentioned, I mean, a lot of information on credit about Equifax and so forth, but that last part I want to talk about is really just understanding credit itself. And again, this is good for not just yourself, but also for your consumers, because your awareness of how credit works will really support your consumers as they start to make this fairly large purchase, you know, the largest purchase that they'll ever do in their life overall. And part of that understanding is, you know, some basic questions and basic data. The file itself is a consolidation of a lot of data and a lot of different types of data that we provide, including inquiries, trade items, and previous, you know, items such as loans and bankruptcies and so forth. But a lot of people also ask just the question, you know, how long does that data stay on my credit file? So this is for more reference sake, but it gives you an idea of, you know, when you have people that have financial challenges, how long will it take before they can actually come up and you can actually work with them? And it could be closer to that deadline than you think. Last or secondly, you know, if you're looking at a credit file, again, just very, very basic, you can also have some of the different ratings and types. And this is sort of giving you an idea of exactly what those are when you look at a credit file itself. But I think the most important part is understanding credit. And I'm going to sort of, talk about credit for about 5 minutes on this slide, because this is probably the most significant part of understanding credit and credit scores itself. So very quickly, a credit score is an analytical model, and you're going to see it everywhere. Basically, the credit score dictates exactly, whether you're with your consumer, what kind of interest rate or what kind of terms they're going to receive from a lender. And in most cases, a credit score itself is it's sort of made up of 5 key components, okay? So let's start with the highest one. The highest weighted is really payments. And payments is essentially how well you pay your bills. If you're always paying your bills on time, then the payment section will always have all the trade ratings as what we call a 1. So basically, for yourself or your consumers, the easiest way to maximize this component is always pay on time. Even if you're just paying the minimum or $50 or whatever it is agreed to terms, as long as you pay on time, that reporting agency will always report you as a 1 in that trade area. And so 35% of your score can be maximized just by paying on time. And it's fairly simple advice and direction. But I will say the second part, or the second highest component of the file, is what we call utilization. Utilization is how much do you have outstanding or how much are you carrying over? So for example, on a credit card, if you've got a $5,000 balance, that's low, but at the same time, if you're carrying over month to month, let's say $4,500, that's a very high utilization. So what's bad, or what do we consider bad? From a utilization perspective, I will tell you that unfortunately is a big way to reduce your credit score or lose points on your credit score. If you have utilization going month to month at 80, 90, or 100% of utilization, you actually can lose over 100 points on your score. So we typically tell people, keep your utilization at 30% or lower, because that will help to maximize your score. So when you look at that individual, that perfect Canadian who says, I've only got 1 credit card and I've only got $5,000 on it, so I'm the perfect Canadian or perfect credit person. Well, unfortunately, that may be incorrect, because the score looks at that person, and especially if they have a high utilization, that person actually can't manage credit. And to that degree, that's why their score decreases. So the 2 key advices for you or your consumers is pay on time, keep your utilization low, and you're going to find a maximum component of your score will actually keep you kept high. Now, the next component, though, is interesting, is history. History is how long you've had good credit. And I think some of you have heard the term thin file versus a thick file and so forth. Well, from a history perspective, a thick file, and especially with good credit history, actually helps to improve your score and maintain stability of your score. And I use the term stability because, the analogy for that is, think of it as a credit boat. If you've got a good credit boat, let's say you've had history for a while, good history, good payments, every year, consider that your boat gets built bigger and bigger and bigger. Why is that important? Because somewhere down the line, if you get a wave that hits your boat, and the wave could be similar to, let's say, a missed payment or a high utilization, guess what? If you're in a big boat, then you won't even feel that, or you might feel it very small. So that wave that hits you, which could be a missed payment, won't even affect your score potentially if you've got a big boat. But the opposite is also true. If you have a small boat, a thin file, you got new to Canada, you have to be conscientious to always pay on time and do all the right things, because any of those waves will actually affect you more. You'll feel that wave much more. Credit on the top is essentially, what do you have in your portfolio of trade items? Most Canadians have a house, maybe a cottage, a car, maybe 2, a couple of retail cards, a couple of credit cards, maybe a line of credit. That's fairly normal. But what we find from a model perspective is if you have too much of anything, that can actually affect your scoring negatively. And most people, the culprit around that is retail cards. So, you know that person. They like to have a retail card because they're a gold customer. I get 10% off. I get free shipping. I get put on a special priority list. Well, that's nice. But if you have too many retail cards, the model says, hey, this person is credit seeking. And because of that, it can actually affect your score up to 10%. So really work with your consumers when you're advising them to have enough credit out there. Don't have too much credit cards out there or too much, because overall, it doesn't do you any good from a credit score perspective. The last component, which is very interesting, is really what we call new, or really what we call the inquiries. And I always joke with people, it only affects the score 10%, but in most cases, it's 90% of the conversation you have with your consumers. And what's new? New is really the inquiries which you hear as either a hard inquiry or a hard hit versus a soft inquiry or a soft hit. And essentially an inquiry is when somebody looks or accesses your credit file with the intent that they'll extend something of value to you. But I want to differentiate between the two because it is important to understand that. So a soft inquiry is an inquiry for your credit information, but does not affect your score. And, let me give you examples of that to really help you understand. For example, HR, if you get hired onto a company, they'll look at your credit file, that shouldn't affect your score, and it doesn't. Fraud purposes, account management. So if anybody out there has a bank account or a credit card, bear in mind your lending institution is pulling your credit file every month to take a look at your credit information, and those are done under soft inquiries, so it does not affect your score. Direct to consumer, those sites such as Borrowell, Credit Karma, those type of sites, they actually pull your credit information, but again, because they're programmed in a certain way, they don't affect your score anyway as much, or they don't affect your score either because they're soft inquiries. But we have the opposite, which is hard inquiry. And a hard inquiry is an inquiry for your credit information with the intent that they would extend something of value to you. And very specifically, we'd be looking at a car, rental, mortgage, credit cards. So anything of value, lines of credit that are extended to you where they pull the credit information, those are what we call hard inquiries. So be conscientious again, when you're out there shopping for a house, don't be doing many other things while you're doing that. So when you're working with a customer or one of your consumers, have them stay focused. If they're looking at buying a new house, new condo, or what be the case, tell them, your best bet to maintain your score is don't go looking for a car, don't be adding any credit cards or retail cards. Stay focused on this deal. Once this is done, you can certainly go shopping around afterwards, but certainly those inquiries can affect your score overall. But it does also bring up the other question, when you have all these consumers, they always come to you with, oh, here's my score. They'll actually come to you with a score. And then you have a score as well. And then the broker has a score. And then the bank has a different score. And the question becomes, well, which one is the right score? Which one is the score that we should use? And the problem is, and it's an odd answer, is they're all right. Now, I say that a little facetiously because the whole thing is they're right because all the models work properly depending upon the use that they're for. But keep in mind, when you get into buying a house, your lending institution is actually the primary animal of what kind of score you want to look at. So typically in Canada, if you're working with a mortgage broker, they are more focused on or have standardized on what we call a FICO 8 score. So although there's a lot of scores out there, you're going to have to advise your consumers, hey, great, you have them, use them as guidelines and coaches. But at the end of the day, work with your broker like Pineapple, who has access to the right score, which is what all the lenders will be looking at. And that FICO score is certainly the one that you want to work with when you want to adjudicate on your consumer. So again, all different scores from different places, but again, there's different scores for different purposes. Even at Equifax, you can pull your credit file and score from Equifax, but you typically get what we call an ERS score from Equifax. It's usually one that uses for a lot of credit cards and such. So keep in mind, there's not a wrong score, but there's probably, how can I put this, a more right score when you're looking at specifically mortgage and buying a house itself overall. Very, very quickly, I did go through a lot of information, as I mentioned earlier, but over and above that, quick commercial, if you may. From that perspective, if anybody's out there that's very interested in credit, we also, from an Equifax perspective, we also push a lot of education, which includes an online course, which will go through basically all aspects of credit. So if you are interested, again, contact your Pineapple or Equifax directly, and we can actually provide you a course which gets more into the deep dive of credit itself. But at the same time, we also will certify you as a credit professional when you complete the course itself. So to that degree, I think I've done my approximately 30 minutes of going through a lot of information. And typically, a lot of people will have questions overall. So at this point in time, I hand the mic back over to Melanie and Dennis. And certainly, I'm available for any questions that anybody may have.
Great. Thank you so much, Eric. We definitely have some questions for you.
Certainly.
Yeah, hold on one second. How can realtors get ahead of fraud? And specifically, what tools or education can they leverage, and what's provided by RICO or CREA?
Yeah. So from a fraud perspective, I think the key aspect is, and you're going to, I'm not sure if you're independent or if you work for a larger firm, but you will have guidelines from your head offices in regards to the current practices that occur. And that is really basically being meticulous in regards to working with consumers itself. I will tell you the challenges become harder and harder. Certainly you're working with a consumer, You're looking at their ID, you're cross-checking their ID, you're working with them as far as trying to identify other things, maybe even asking them for more identification. But certainly your head office will provide you the right guidelines itself. And really it's a coordinated effort, not just yourself as a real estate agent following the rules, even what RICA provides to you, but beyond that, working closely with the brokers to try to identify some anomalies. Things that you might notice that might seem a little strange in regards to, how a person pays a quick deal. When you have somebody that's out there looking at a quick deal getting done, you start to wonder, well, how's that? This is going to be a lifetime purchase. How is somebody dropping, 50,000 very, very quickly from an unknown source? So in most cases, and I know it's not the great answer, yes, you've got the current practices that you have in place, but part of it is your gut feel. Sometimes it's the reality of things. If it feels too good to be true, it's nice to see the deal happening and the sale happening, but you have to be conscientious that you're part and parcel to protecting Canada and the whole industry against fraudulent activity. And as I mentioned earlier, we're starting to see more and more of that. So you have to be very conscientious. And the key thing I would say is you have guidelines. It's really to follow the guidelines that your head office and or the associations do provide to you.
Okay, thank you. So one of the other questions is about CMHC charges. Why are CMHC charges added into mortgage with banks and not like other lenders like B lenders? It can seem unfair to the borrower.
Well, I'm not going to get too much, because it is CMHC and I'm Equifax. But this does get into the discussion of basically what we call mortgage insurers. And that's a whole lesson in its own regards. So certainly what happens is when you're working with a mortgage insurer, they will actually insure the mortgage so that it will get paid back out to the lenders and such so that people will not actually lose money. So think of it as regular insurance. So when you are working with B lenders, potentially they are not working with an insurer. And as such, they would be obligated to the full amounts if anybody went to default or even privates and so forth. So to that degree, though, you're going to find that a lot of those people will probably charge even a higher interest rate overall. So there's plus and minuses in regards to the use of a mortgage insurer. And I will tell you, there's also new criteria for mortgage insurers as well, because many of you may or may not be aware that if you don't have a certain amount of a deposit down, you can't even use a mortgage insurer. So that's probably the more, again, I'm going to send you over towards more of the CMHC websites, which talks about insurers as a whole. But certainly that is really the key difference between the different types of lenders that are out there is one will insure the deal, whereas the B lenders may or may not insure the deal itself. And that's why there's a premium in regards to that.
Yep. Another question from one of our attendees is, if you see a lot of inquiries on someone's credit score, what impact does that have on their overall score, and does it impact it negatively?
Well, inquiries as a statement, yes, will impact your score negatively. Let's start with that, okay? Because more and more inquiries means that the individual is credit seeking. But I will put a caveat around that, because in the mortgage space, and this is why we said that we're using a FICO 8 score, just so everybody's aware. It's a very interesting score because it's called a shopping score. It's a shopping model. And what does that mean? The expectation is somebody will have a lot of mortgage inquiries while they're searching for a house. It's not like you go to one person, one lender, you're done, you buy the house, and there's only 2 inquiries. In some cases, you're going to multiple different brokers, maybe, multiple different lenders, maybe multiple different insurers. So the model itself knows that a consumer is shopping around. So the model itself, the FICO score 8, and this is why we use it in the mortgage space, actually has what we call a deduping window. So within a 45-day period, all those inquiries related to mortgage will actually be treated as one event from a scoring perspective. So what does that mean? You can have multiple inquiries because you're shopping for a house, but it will not affect your score or your FICO score because the model knows that you're shopping around. So that's why, it's kind of a little bit of a, how can I put this? An urban myth that every time you pull a credit file, it's going to affect your file. In the mortgage case scenario, it actually won't affect your score within a 45-day period. But remember, it's not a free pass. As I mentioned earlier, when you're shopping for that house using a FICO score, don't go buying a car, don't be getting credit cards, because those are not mortgage-related inquiries. And to that effect, those will affect your score negatively, separate from the mortgage inquiries.
Okay.
Yeah.
Another question about credit reports. How can consumers dispute payments? So if it shows on the credit report, it's still showing it after they've actually made the payment, how can they actually make that dispute?
Yeah. So let me start off with why there's a discrepancy, and then I'll go into how to fix it. So
Sure.
keep in mind, the Equifax has a bit of a challenge. We're a reporting agency. And at the end of the day, we don't make changes on a credit file. What we do is consolidate all the reporting agencies across Canada, including all the banks, credit cards, and so forth, take all that information, consolidate it, and then put it back out to the different users of Equifax, members we call them, to be able to use the information. So some challenges that occur. One, if the lending institution does not report the right information, we don't change it. We just basically report it back as is. So that could be one area of where there might be a discrepancy. Second area, this is what we call keying and linking, and this is a challenge. What it is essentially, we all like to think of us as ourselves as individuals in Canada, but guess what? There is multiple people named, multiple hundreds, if not thousands of people named John Smith. There's multiple people that have your same name in Canada, and or there's situations where people reside or have the same phone number. So for example, the classic John Smith lives at a house and he's got a son, and for whatever reason he called him John Smith's Jr., and then he had another son who also called John Smith's the third. Well, guess what? These three people live in the same house, same address, same phone number, all have the same name. Equifax is now obligated to figure out, well, who's buying what and who's got what credit card. I think the biggest challenge I always have is twins. Oh, we hate twins. You have twins who basically, you got to figure out which one's the bad twin and which one's a good twin. So to that degree, when we take the millions of bits of information from a lot of the lenders and put it into the mix and we key and link, try to identify who does what, there are circumstances and situations where someone may get somebody else's trade line or somebody else's payment or what be the case. So that does occur when we are dealing with literally millions of bits of information every day. But at the same time, Equifax is absolutely adamant about trying to fix that where they know and identify that issue. So when a consumer looks at their credit file, and I highly advise consumers to look at their credit file every 3 months, and now with Bill 53, it's free. If a consumer notices that there's an error on their credit file, they go to equifax.ca and they can open up a case study or a case, which then Equifax will investigate and then we'll resolve it as quickly as possible. But in that case scenario, we just require your help to understand exactly what the issue is and how to fix it. I will tell you very candidly, depending on the situation, it can take anywhere from 2 weeks to 8 weeks to fix that problem. But let me throw out one other thing, from a standpoint of mortgage industry. If you're working with a broker like Pineapple as a broker has the capability to do what we call a mortgage escalation. And they can work on behalf of your consumer to fix that issue, provided the broker has all the necessary proof and information. They work with Equifax, and usually we can resolve that within 2 to 4 days. So if you have a customer or a broker or a consumer that has an issue that they've identified to you, work very closely with Pineapple in regards to the brokers to help you fix that, so that when you do go through the transaction, the deal will go through much smoother. So hopefully that answers it. It was a little long in the answer, but I want to provide also a little background as to why it happened.
Okay. Thank you so much, Eric. We're going to go through some more questions here. Does Equifax require credit application in order to pull someone's score?
We require, from an Equifax perspective, what we require is what we call consent. So working with all the brokers in the world, just so you're aware, they're very aware of exactly why they pull a credit file, how they pull it, and for what purpose. And that's what we call permissible purpose and consent. So what we need from anyone who is a registered member of Equifax is a document or some information from the consumer that basically says, I, as a consumer, know that Pineapple is pulling my credit file for this purpose, for this long length of time, and for who they're going to do or what they're going to do with the credit file information. So the general answer is no, you can't just pull a credit file on somebody. There is actually a process in place, and this is why brokers like yourselves have that process in place so that you can do it diligently, but protect the data. So, I mean, candid point, think of it as your own credit file information. You absolutely want it protected. You absolutely want to know who's pulling it, and you want to know exactly why you're giving that information up. And that's really what the guidelines are for brokers and lenders in the mortgage industries, to have that available to them, to have that credit file available. Quick caveat though, that's for consumer credit files is under a lot of strict guidelines, but commercial credit files, that is not as compliant or it's not as private. Anybody can pull a commercial credit file, and that you can do just right online from Equifax.ca. So there is a delineation, but definitely private information. We really are very strict about how it's used and what it's used for.
Cool. Another question about hard hits on your credit file. Is a rental application for a house considered a hard hit?
Yeah, actually in Canada, rental property inquiries are actually considered a hard hit in Canada. So that's the way it is. And I know if you work in the US, it's interesting because in the US, they're considered soft, but in Canada, it's been defined as a hard inquiry. So easy answer on this one.
Good. Another attendee asked, why do you see NA when trying to pull a credit report?
NA, well, in general sense, again, I don't know, depending upon where it is on the credit file, but I'm going to suggest that NA means not available. And to that degree, we call these no hits. So sometimes you're trying to pull a credit file on an individual, but depending upon their situation, they have not been able to generate enough information to provide a credit file complete, maybe not a score. And to that degree, we would deliver what we call a non-hit, where no credit information is delivered. So someone very new to Canada would not have that credit information. Somebody who hasn't used a lot of their credit, even though they might have credit cards, but they haven't used it for 3 or 4 years, may receive an NA or not available. So so again, depending upon where the NA is, I'm assuming it's going to be not available, and it's just because there's not enough credit information to be able to generate either a file or a score. Okay. You know what? I'm going to throw out a quick little answer. It's kind of like my father-in-law. My father-in-law is an old world Italian. And we went to Equifax, and he does not exist because he's an NA. Because, you know, and I asked him, what are you doing? He goes, well, I pay everything cash. My house is paid for, cars are paid for cash, my business is under my son's name, and he basically, from a credit perspective, doesn't exist. So it does happen, but certainly, you know, I keep telling him if you ever wanted to get a loan, he's out of luck.
How many times a year can you pull your own credit report?
So the formal rule is with Bill 53, you can pull your credit from Equifax directly with a score once a month online. But if you want to pull it more, you can actually do it through snail mail, funny as it may be, as many times as you'd like to. But if it becomes more important to you about credit, if you're pulling it that much, two things. You can either use a D2C, direct-to-consumer site like a Borrowell or a Mobile Money or such. They don't charge you if you want to keep track of it. But secondly, if you really want to be conscientious about your credit, Equifax does have what we call credit monitoring services. And to that degree, not only are you able to pull your credit information as much as you like, but we will also notify you if anybody's actually looked at your credit information or if there's been any changes. So certainly, depending upon how intrinsic you want to be aware of your credit file information, it's available through, again, through Equifax.ca. Look for credit monitoring services, and it gives you more information and more availability to your information. And again, warnings and alerts when somebody else is looking at it.
Another question, does utilization rate affect credit score as it is reported?
Yes, it does. And I mentioned earlier on the chart or the pie chart, utilization can affect your score up to 30%. So be very conscientious. If you have high utilization, especially in the 80, 90, or 100% range, you could actually lose up to 100 points. So even though everything else is perfect, if your utilization is high, it can actually decrease you fairly dramatically. So keep that in mind. You know, some people think, oh, I just want to have one credit card. Well, if you're talking about credit score, you might be better off to have 2 credit cards and split the balance or raise the limit than you are to have that low limit, because the low limit will obviously, if you do the math, will increase your utilization, and the higher the utilization, the worse your score could be. So it's kind of a funny animal. When you need credit, nobody will give it to you, but when you don't need credit, everybody will give it to you. So, you know, as long as you can manage the credit that's being given to you, you will maintain a fairly good score. And that's really it. Don't be tempted, you know, you have a good high credit limit, don't be tempted to use it, and that'll keep a good score for you.
Is the free Equifax report, is that available all across Canada?
Yes, it is. Even though it was Bill 53 was originated and legislated in Quebec, the free credit file score, Equifax looked at it and said, you know what? that's a value for all Canadians. So to that degree, all Canadians from East Coast to West Coast can access their credit file for free online from Equifax.ca. So it is available, and not just yourself, but again, advice for your consumers. You can give it to your consumers as well, and you know, be the hero. Teach, what's that sort of that cliche? Teach them how to fish. Don't just give them the fish. Teach them how to fish. Teach them how to learn about credit and protect themselves as well.
Okay. What is your best advice for buyers that have no credit?
For buyers that have no credit, I mean, it's a bit of a journey, to be very very frank with you. And maybe let me get into this. I'll give you the advice, but certainly sometimes it's a little easier to do it in retro. For example, my children, who are no longer children, but as soon as they got into university, I gave them all a credit card. Now, don't get me wrong, I helped them. But the whole goal was I was building their credit, because if you remember the credit chart, history is a key component. So my goal, helping my children, was to give them 3 or 4 years of clean credit history, and then send them off to the world, and what they do is what they do. But at least you're starting them off with a good base. So that's a little bit of foresight from my perspective for people. But if you are starting out brand new, like maybe new to Canada would be the case, the key things I would suggest to you is, A, absolutely build credit any way you can, but be conscientious of a couple of things, 3 things. One is, whatever credit you get, always pay it on time, even if it's the minimum, pay it on time. 2, the most important thing is keep your utilization low. But 3rd, and this is an interesting animal, whatever you're doing, ensure that it is being reported to the credit bureau of your choice, be it Equifax or I hate to say our competition TransUnion. Why? Because it's very much like that. If a tree falls in a forest and nobody's there, nobody hears it. So if the trade or the credit card or whatever you get does not report to Equifax, we don't see it, we don't hear about it, it does not help to build any credit whatsoever. So keep that in mind as and I'm not going to say specifically what kind of card or where. I'm just saying that any vehicle that you have or any credit information or any credit trade you get, just ensure they report to Equifax so that you can start to build your credit overall. After 3 months active trade, you'll be able to generate a score for a mortgage. And if you continue on good practice, it basically helps to solidify your credit vote so that you can continue to build it bigger and bigger.
Great, thank you. You mentioned before that there's a course to become a credit professional. How much does that course cost?
So that course is in the mortgage industry itself, and it's customized specifically for mortgage brokers and lenders. But just so you're aware, the current price for that product is $425. It's an 8-module course, all online, because we developed it during COVID. But it was actually developed with brokers in mind. So they actually helped us to develop a course that is very specific and has all the use cases for the industry itself. And as I mentioned earlier, one of the other great values outside of knowledge is you actually get an Equifax certification badge, which you can use on your social media, your Facebook, your signature, whatever be the case, to really set you apart from everybody else.
Great, you just answered the next question, because someone was asking how do they actually show that they took that course. So
yeah, so it's a digital badge that's very controlled, so that actually when you click it, it'll actually tell you the name of the person, where they got it, how they got it, the dates and everything else. So I think it's like those Google professional badges where, it's not just a PDF, it's actually controlled through a central network as well.
Okay. Someone was asking if a borrower has many CR cards but always pays on time, what is the impact to their credit rating?
Again, it's a balancing act. I've showed you the chart. So good kudos to you if you're always paying on time. That's a great thing, because then you're maximizing the payment terms or the payment component 35%. But you start to balance out into the area of maybe there's too many. So be careful if you have too many credit cards, because that's going to start to make the model look at you as credit seeking, start to increase your debt ratio and say, hey, is that person have too much? So will it start to affect them in a negative perspective? But certainly, the comment about paying on time really will help to alleviate that. And then again, you get into the history part. If somebody's been doing this for a long time, guess what? They've got a good credit vote. And as such, the model will say, you know what, this person can manage 6 credit cards or 7 credit cards because they've been paying on time all the time. So it's not an easy answer. It's not a linear answer where 1 card equals this and 2 cards equals that. There's none of that. It's really a balancing act of all the different components.
Cool. I think you answered this next question, but if a client is actually shopping around for different rates and services with different lenders, does each credit hit count as a hard or soft hit? But
So answer that with two parts. A, absolutely, if you're shopping for something like a property rental or a house, that is a hard inquiry. But reminder, in the mortgage space in Canada, all the mortgage inquiries are deduped or treated as one event within a 45-day rolling window. So again, it's a shopping model. So the FICO 8 score knows that you're doing this and does not affect your score within the 45 days. So all those inquiries are all lumped together as one inquiry from a scoring perspective.
Cool. I've got 5 minutes left, so we've got time for a couple more questions.
Sure.
One of the questions here is, how do you handle a situation where a credit account has stayed open for a number of years and they've tried to cancel it, several times, but the company refuses to close it?
Okay. Well, now this gets into a bit of a balancing act. I mean, from an Equifax perspective, remember, we only are a reporting agency. So unfortunately, we don't intercede in that scenario. But I did show you a slide about, from an Equifax perspective, how long we keep data and trade information and so forth. So if you have a card or something that's going over for a fairly long time and you've had no activity on that card whatsoever, bear in mind that a majority of negative information falls off of a credit file after 6 years. So again, I don't know the dates and times, but if somebody's been trying for a long time and has done nothing on a card, essentially that credit information, if it's negative, will actually fall off the credit file after 6 years. Outside of that, I'm not really sure why a credit card company will want to keep you as a customer if you're not doing anything and so forth. So I don't know all the details, but certainly I just want to give it to you from a perspective of Equifax. We don't make or intercede there. We really just report what's sent to us.
Good. What steps are required for a customer to repair or fix their credit scores? If it's let's say it's around 400, is debt consolidation a good or bad thing? And what other steps can they take?
Yeah, well, if you remember the chart I provided, the guidelines around, what is good practice is what will help you to improve your score. I mean, 400, let's be candid, that means that the person has not been paying on time, has had possibly a bankruptcy, has probably had, high utilization. So you really have to improve upon all the different components. Key thing, 35% score is just paying on time. So whatever you do, let's start there. Let's make sure you're at least paying your bills on time. Don't delay even a week, because that changes it from a 1 rating to a 2 rating. So always pay on time. And then if you can, pay more than just the minimum, because if you're just paying the minimum, your utilization is going higher, and that's increasing your score. Those 2 key components account for about 65% of your score in its own regards. So if I were to say to somebody, what do you need to do? Let's start with those 2. And all the rest of the stuff are all just fine tuning. How long? I will tell you, it's a little bit of a hockey stick. So as you improve your practice and so forth, you find the biggest improvements are actually right at the beginning. So within the first 6 months, you should actually have some good improvement. And it gets a little harder to improve after that. But the other thing I will say though, when we talk about scores itself, be also very conscientious of your credit file itself and make sure it's accurate. And this is why we always impress upon people, get your credit file, make sure it's correct. Because here's why. If you've recently had a proposal or a bankruptcy or what be the case, there are certain items on your credit file, if they were not corrected, your score will not improve when it should have. And this is where you work with a broker like a Pineapple to be able to say, hey, help me review my credit file because I want to understand, is this accurate? Because if it is inaccurate and you work with a broker to help fix your credit file, you could maybe see an increase of 100 points or 150 overnight just because you clean the credit file. So that is another area to watch out for, is maybe my file is not correct. And as such, make sure it's accurate and then go from there, because that might be a big area for where you can improve your score just by making sure it's clean. It's not repair, it's basically just cleaning it up.
Right. Well, thanks so much, Eric. We've got a lot more questions here, which what I'll do is I'll summarize all the questions and send them to you. We might have to do a little Q&A after the fact.
Yeah, no, everybody always has a lot of questions, but hopefully at the end of the day, I provided a lot of information for everyone. Again, fairly high level, but certainly your knowledge is really key in regards to helping your customers. So hopefully there was a lot of valuable information for your folks.
Thank you. We appreciate your time today.
Great. Shuba, were you going to close off? Maybe it's going to bestow on you, Dennis.
Yep, he's probably on mute. Thank you for your time today. Appreciate everyone joining the call.
Thank you very much, everybody.
Thank you.